thank you to our witnesses for lending your expertise and your prescriptive insights to today's discussion. We do find ourselves experiencing a gravity of hurt, the disparate impact, historic times, and familiar times. I want to take a moment just to acknowledge an event that has far too much precedent in our nation's history. This week marks the 99th anniversary of the Tulsa Race Massacre, also known as the Black Wall Street Massacre. So nearly a century ago, mobs of white residents stormed through Tulsa's Greenwood district, or the Black Wall Street, attacking Black residents and businesses and decimating what was then the country's wealthiest Black community. Homes, businesses, and churches were destroyed, and at least 300 lives robbed. While they tried to rebuild, the denial of basic social and economic rights, including housing, healthcare, and education, effectively ensured they never would. From a lack of reparation to redlining, government policies guaranteed Greenwood's demise was permanent. Now, there might be some who think that this historical contextualizing and elevating this in this moment is not germane to the work of this committee. But our nation's financial center is named after a structure erected by slaves. Wall Street then served as a site where they were bought and sold. Slave owners turned to property insurance to protect what they saw as an investment, and banks issued loans using slaves as collateral. Today, predatory lenders set up in Black communities where predetermined health and economic outcomes ensure a steady stream of customers. There is no separating the history of racism from the history of financial services in this country. So how do we respond to this current crisis? How we respond to it means we cannot deny that history or exacerbate existing disparities. 2008's financial crisis was a Great Depression level event for Black Americans, wiping out decades of wealth building, primarily in home ownership. However, 2013 study found that Black banks were 10 times less likely to receive bailout funding during the crisis. Nearly half have gone under since 2007. Mr. Pugh, how does the disappearance of Black banks further exacerbate the racial wealth gap?
So, as you have rightly pointed out, the disappearance creates a real cognitive disconnect in our communities in terms of the ability for small business entrepreneurs, women, minority businesses to have a bank, to have access to mainstream solutions. So examples would be, if I think about my area, Brooklyn has some of the largest, has had some of the largest women entrepreneurs in terms of growth in that particular borough. And by not having access, with the exception of Carver, to other options, in many cases, it could have and has undoubtedly created some real limitations. Across our country, we've seen that the ongoing closing of our banks, and it really gets down to capital and capacity. And so what I think we frankly must look at for MDIs is the ability to ensure that they have access to capital through various programs. Congress can play a very critical role in that. And then capacity. On the capacity side, again, very much working with fintechs, big banks, small banks, to ensure that there are real programs to build technology to scale that, again, allows us to be able to ultimately serve people of color.
Thank you. Thank you, Mr. Pugh. One of the Paycheck Protection Program's many missteps was automatically disqualifying those with criminal history or arrest. Anyone on the panel that would like to weigh in, was this punitive exclusion something your institutions advocated for? And do you support our calls to Secretary Mnuchin asking for removal of this exclusion?
We would absolutely support that call.
Thank you. The gentlelady.